Stevens here with the National Real Estate Post. I want to let you know that Carl White of Marketing Animals Infamy has a book that he just put out, and it's called Loan Officer Champions. Now, here's the deal. They take not one, not two, but 10 top producing loan officers, not middle of the road loan officers, not low producing, but 10 top producing loan officers, and they have them share what they do to succeed, what makes them top producers. The idea is you buy the book, you read the book, you consume the information, you emulate what these top producers do, and then you become a top producer, or at least better than where you're at right now. It's always good to listen to other people's opinions on what works, especially top producers. Check it out. It's a really cool book. Just click this banner right over there. So guys, this is really, seriously, this is a game changer for non-bank mortgage lenders, and it's going to spread to other states. But right now, New York is about to be the first state to require non-banks to participate in the CRA, the Community Reinvestment Act. Now, the CRA rule, enacted in 1977, mandates that banks, depositories, help meet the credit needs of communities in which they take deposits, specifically low and moderate income neighborhoods. The New York Senate just sent a bill over to Governor Hutchins to sign that would require non-banks, get it, that's you, to also participate in the CRA. Here is the problem, my friends. Boy, nobody really looks at unintended consequences, do they? Non-banks, they are undercapitalized and they don't have access to federal funds. They don't have access to the Federal Reserve discount window to help them meet short-term liquidity needs. Meaning, non-banks are woefully undercapitalized to truly participate and help with a CRA. This is going to do nothing but create a regulatory burden for independent mortgage banks and a new reason to sue them for not doing what they are not designed to do under the current structure of the independent mortgage banks and the CRA. Yuck. This is going to bring little to no additional relief, guys, to low and moderate income families. The only independent mortgage banks that could probably do anything about this would be like the big guys, you know, Quicken and Guarantee Rate, maybe a couple of the other big players out there. Which, by the way, means if they don't participate, they're going to be the first ones on the chopping block of a lawsuit. So for the big players out there, it's time to spend a little less money on commercials with high-priced professional athletes and move that money to communities on the lower socioeconomic rungs of the scale so you don't get sued. We'll see what happens here. But again, this will spread beyond New York, coming to a state near you. I thought this was kind of interesting. This top producing Las Vegas real estate agent, his name is Julian Worley. This guy right here, he decided it was a good idea to burn his own house down. He even made the cover of a real estate magazine. So he's in jail right now on a $20,000 bond. Now, in Julian's defense, he says that his brother burnt the house down while he was high on a controlled substance. Which, if they're hanging out together in the house, one can only extrapolate that that means they were probably both high as kites. I mean, I don't know, but that's what I would think. But taking this whole idea of substance abuse, here's a question. Are drugs a problem or an issue in the real estate and mortgage industry? I'm serious here, guys. I'm not throwing daggers. Trust me, Brian lives in a brittle glass house. It's an honest question because I've heard that might be the case. Now, let me know what your thoughts are in the comments down below. And I want serious comments only. None of this, I got so high last night that I searched for one of my friends and he was helping me look for him. Nothing like that. You know, nothing like if everybody in the world smoked a joint at the same time, we'd have world peace for 2 hours, followed by a food shortage. None of that type of stuff. I want serious responses only. So, anyways, back to the story at hand. How do we know this guy was high?
Because I got high. Because I got high. Because I got high.
The blaze apparently spread to several other structures before being contained. Officers initially failed to locate Worley at his residence, but were able to follow his trail after he tried setting fire to the same property twice.
That he burned down his own house, then tried to set fire to 2 other homes as well. 48-year-old Julian Worley was arrested last Saturday. Now, police say that he called his brother after starting a fire at his own home in Nelson, south of Las Vegas. But the brother, according to police, told officers that Worley was intoxicated. The suspect then showed up at his brother's house and tried to light it on fire twice, according to police.
That's right, guys. He couldn't light his house on fire with a bottle of kerosene and a lighter. Do you know how high you have to be for that to happen? By the way, this Worley guy, he should get fired from his job as a real estate agent before that guy who took naked pictures of himself along with his listing, who did get fired. Now, if you didn't see that, here's one of this Southern California agent's listing pictures. No joke. Well, it Joke intended, but he actually really put this out there in the ether to sell the house. Check it out. Treasury Secretary and previously 15th Fed Reserve Chair Janet Yellen says inflation is going to continue through 2022. Now, why only through 2022, one might ask? Well, my guess is that that's the midterm elections, and based on how swimmingly well everything has been going under the current administration, we'll probably see both the House and the Senate go to politicians that are a little bit more business friendly and actually think rampant and out of control inflation is a bad thing for the country and might actually try to do something about it, unlike what we see right now. Now, Yellen says Americans haven't seen inflation like we've experienced recently in a long time, but as we get back to normal, expect that to end. Now, call me a cynic if you choose, but have we not taken the whole idea of normal and thrown that out the window a long time ago? Frankly, I'm not even sure what she means when she says normal. Point being, expect inflation to continue upward unchecked for at least the next 14 months if you believe Yellen. Now, why does this matter to you? Well, if everything is more expensive, including mortgages, interest, and ability to buy homes is going to wane, which we are already starting to see as existing and new home sales have slowed in the coming months. So, the idea here is for the next 14 months, nose to the grindstone, barrel down on this stuff, focus on your business, and maybe you'll see some relief in a little over a year, again, if you're to believe Yellen. With that said, you guys make it a fantastic Tuesday, and I'm looking forward to see you tomorrow on Wednesday, which, by the way, I will be down in Southern California in Temecula at the Career Compass event. So if you guys want to come down to the Pechanga Indian Casino and Resort, come on down and say hi. I look forward to seeing you. That said, talk to you soon. Ciao.